Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
This episode is brought to you by LatinXcellence. Visit LatinXcellence.com. That's LatinX, CELLENCE.com or LatinXmovement.com to learn more and shop our merchandise. You are excellence. Hello and welcome to another episode of On My Way to Wealth. My name is Luis and I'm your host. Tax season is right around the corner. This episode was released on January 19th, 2022. So tax season is upon us. Before we get there, I wanted to give you just some tips so that you can have a successful experience when filing your tax return and hopefully getting a refund. The IRS has announced that they will start processing tax returns as of January 24th, 2022. January 24th, that's a Monday. That's when they will finally open the doors to say, all right, we're ready for you to process your returns and start issuing out refunds. So what are some of the things to look out for this year? Number one is especially those that have children. One of the changes was last year in 2021, there was an advanced child tax credit that people could opt in or out of to receive from July all the way up to December, where you would get half of the credit as an advance sent as a monthly payment. So if you opted in for that payment, the IRS already started sending out letters in December called IRS Letter 6419, where it actually reports to you the exact amount of the payments that you received. This is going to be very important because on your tax return, you have to then reconcile the amount of payments that you already received with whatever might be remaining on that credit, right? So it's super important to avoid any delays in your tax return, that you actually know the exact amount of the child tax credit advance payments that you received. If for some reason you did not receive this letter or misplaced it, it's okay. You can go to the same portal that you used to opt in order to see the payments that were made. So I'm going to put a link in the show notes, but it's the Child Tax Credit Update portal. You can go in there and see exactly what payments were received, because you will need to either give that to your tax professional, or if you're doing your own taxes on software, there's going to be a question asking you if you received advance payments, and if so, how much. That's going to be very key to avoid delays in processing your return. Another thing to consider regarding the child tax credit is wanted to give you a little heads up. Depending on your situation, you might find yourself where your refund might not necessarily be as big as usual in this case, because the child tax credit, number one thing to remember is that it was in advance, right? So you got half of what your credit is upfront if you opted in. Now, the credit did go up. It used to be $2,000 and it went up to $3,000 for kids older than 6 and younger than 17. And then under age 6, it actually went up to $3,600. So it might not be necessarily a huge impact because you're getting half of a bigger number. However, there are some phase outs for the new higher number. So if you ended up making more money in 2021 than you did in 2020, because these credits were sent to you based on your income in 2020, it is possible that you might have made more, and then your credit, let's say, would not be $3,600, it would have been $2,000, but you already got, half of it up front, right? So that may cause a little bit of an issue, which is why super important that you have the exact number that you received. The first phase out begins above $75,000 for single parents, $112,500 for head of household, and $150,000 for joint filers. And the credit is reduced by $50 for every $1,000. And then there's a second phase out based on modified adjusted gross income of $200,000 for single filers and $400,000 for couples filing together. So a little bit complicated to make, but ultimately, if you have your letter, you'll be able to properly calculate and reconcile whatever credit you receive during the year. So make sure you do that. Another great news actually about this particular credit is that for this year, there's no requirement for 2021 to be employed or even have earnings in order to claim the credit. So before, there used to be a $2,500 earned income floor, and that was actually removed. So if you or anyone you know has children that are qualified for this credit and they didn't even work or didn't have any income, they can still go ahead, even if they don't have to file a tax return, they should, so that they could go ahead and claim this credit, because otherwise there's no other way to get this credit or the remainder of it, right? So very key number to know there. Another thing to know about is if you received a stimulus payment, like the third stimulus payment, the IRS will also be sending out a letter because it will ask if you received it and also how much. So you want to be on the lookout for that particular notification as well, because it's going to be important, because if you enter the wrong number, there might be a delay in your tax return. So the IRS notice will be 1444. That's going to show the stimulus payments. And IRS letter 6475 is going to show the economic impact payment, which is the third stimulus sent out in 2021. So make sure you have those so you have the exact numbers. One way to avoid delays. Now let's talk about the child and dependent care credit. This is a really big change that was made for this year. The credit actually went up significantly. Before, if you had one child, you can claim up to $3,000 of qualified expenses and up to $6,000 for two children. If you had whether it was after school or childcare, now this has been increased significantly. Number one, the dollar amount. For one child, you can claim up to $8,000 of qualified expenses. For two children, you can claim up to $16,000 of qualified expenses. And the other cool thing that happened too is that the credit, the maximum you could have claimed before was 35% of the qualified expenses. And now that has gone up to 50% of the qualified expenses, which is a huge difference. So to give you an example, in tax year 2020, the maximum credit anyone could have received for one child was $1,050. And the maximum credit you could have received for two children was $2,100. That has actually significantly gone up. So in 2021 tax year, the maximum credit is $4,000. And the maximum credit for two children is $8,000. So that's a pretty big difference. And the good thing about both of the credits, the child tax credit and the child and dependent care credit, is that they're both what they call refundable credits. I spoke about this briefly in another episode, but I'll give you a quick recap. Credits can be two things. They can be refundable, non-refundable, and some are partially refundable. But to give you the gist of it, a refundable credit, let me tell you a non-refundable credit first, which might be easier to understand. A non-refundable credit means that when you receive a non-refundable credit, if your tax liability comes down to zero as a result of that credit, and there's still money left, you don't get that money that's left. So just to give you an example, let's say you were entitled to a $2,000 credit that is non-refundable, and your tax liability was $1,000. So that $2,000 credit would actually wipe out your entire tax liability to zero, but then you lose that remainder $1,000. That's it. The most that credit does is bring your tax liability down to zero, which is great, right? However, refundable credits actually bring down your tax liability to zero. And on top of that, if there's any money left, you actually get that as a refund. So in the same scenario, if you have a $2,000 refundable credit and your tax liability was $1,000, you would wipe out your tax liability down to zero, and then you would get a $1,000 refund, right? So this is a pretty cool thing about these two particular credits. So, there's some people that may not have worked in 2021 because they lost their jobs, whatever the reason might have been. But if they have children, then they should file, because then they can get the credit even if they didn't have any earned income. So a pretty good deal on that one. Now, as of December 18th, the IRS said that they had not processed 6.3 million returns. So you can think about just the amount of backlog. The IRS came out this year and they announced that they are still feeling the pain from the pandemic and everything, staff shortages, et cetera. So it's not going to necessarily be smooth sailing. But if you follow a couple of these tips that I'm going to tell you, you set yourself up for the most success. So number one is it opens January 24th is when they start processing. However, a lot of tax preparers and tax software companies are already open as of January 14th. So you can actually start doing your taxes if you already have your documentation. Then go ahead and get them done, even if they're not ready to be filed, but at least they can be prepared. You know exactly what you're getting. And on the 24th, they can go ahead and hit the submit button. So go ahead and do that as soon as possible. Number 2, you want to make sure that you get those notifications about the child tax credit if you got any advance, so IRS letter 6419. Also, if you received economic impact payments, you want to make sure that you get those notifications. Notice 1444 and notice 6475, so that you know exactly the amount of stimulus payments you receive, because the IRS will ask you. And if you have a wrong amount on the form, it may cause a delay. And we definitely don't want that. Another thing you should do is you should file your return electronically. So if for some reason, there are some exceptions where a paper return has to be filed, but if you don't have a reason why it has to be filed by paper, you should absolutely file electronically, because that's going to be the easiest way for the IRS to process this return. And then combined with that, if you're entitled to a refund, you should do direct deposit of that refund. So that combination of electronic filing, direct deposit, and having the right amount of credits that you received reported is going to set you up for success in terms of the turnaround for the IRS to process your return. The IRS anticipates right now that it should take about 21 days to process a return, which is, just about 3 weeks. However, just keep in mind that there are certain returns that cannot be processed until mid-February. One of them is if you're claiming the earned income tax credit. By law, the IRS is not allowed to process those returns anytime sooner than mid-February, just because of to prevent fraud and things like that. Now, the deadline this year, another thing to know is that, typically it is April 15th, but for 2022, as of the recording of this podcast, the IRS stated that the deadline is April 18th, because there's a holiday that brings it over to April 18th. So have a little bit more time. However, the sooner you file, the better. File electronically, get direct deposit, and get your economic impact payments and your child tax credit payments. Know that in advance, and you should be good to go. So I will put a link for the child tax credit. So in case you didn't get that letter, so you can log in and check out, log into your portal and just check out what you received, so you're ready when the time comes. And as always, there's another thing actually I wanted to talk to you about before I let you go is the free file program is still in effect. You might have heard that there's some major companies that exited the free file program, but the program actually still does exist. So if you made $73,000 or less in 2021, you qualify for it. So you can, I'll put a link in the chat, in the show notes as well for that. And also the VITA program, which is the Volunteer Income Tax Assistance Program, that's still available if you made less than $57,000. People with disabilities or limited English-speaking taxpayers, or those ages 60 and older, can also get help with the Voluntary Income Tax Assistance Program. So I will put a link in the show notes as well for that. There's a VITA locator tool, and there's also a phone number that you can call if you want to find out what the nearest location to you is. And another thing that's very important too, the IRS on the very first page of the 1040 is asking this exact question. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency, right? So we're talking about Bitcoin, Ethereum, all that stuff, right? This is something that you have to answer yes or no. You cannot leave it blank. So here's the question. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in a virtual currency? The answer has to be yes, or it has to be no. Now, here's the good news, because it is a little bit confusing. It was actually even confusing to myself. So don't feel bad if that answer confused you. I looked at the IRS website, and it says, if your only transaction involving virtual currency during the year was to purchase virtual currency using real currency, then you are not required to answer yes to the form 1040. So what that means is if you logged in to, say, PayPal or Robinhood or something, you transfer actual money to it, and then you use real currency to buy cryptocurrency, then you can go ahead and answer no on that particular question. I know it sounds a little bit confusing, but technically, the correct answer would be no if all you did was actually buy cryptocurrency with real money. Now, something to keep in mind, since we're talking about cryptocurrency from a taxation standpoint, if you did sell cryptocurrency, obviously you would have to click yes to the box. And also keep in mind that cryptocurrency is taxed just like property is. And so that means that you may be subject to either a capital gain or a capital loss. If you hold it for a year or less, the capital gain or loss is going to be applied at your ordinary income tax. And if you hold it for over a year, it's going to be at, right now, capital gains taxes there's 3 capital gains taxes, and there are some exceptions for certain things like artwork and NFTs, but ultimately you have to report it, right? Whether it's a profit or a loss. So if you did sell some cryptocurrency, make sure that you also report that. I've seen that some companies don't necessarily provide you with a tax form when you own cryptocurrency, but sometimes you're able to log in and download some sort of spreadsheet. Ultimately, what you want to know is when did you buy it, how much you bought, and then when did you sell it, and how much you sold it for. And then you calculate either the profit or the loss based on that. And then you pay taxes accordingly, or you can take a loss accordingly as well if you had a loss, right? So just keep that in mind. So just know that that's another question that you're going to have to know the answer to, and also have the proper documentation if you did have any transactions that involved creating either a profit or a loss. So I hope you guys have a great tax season. Thank you for tuning in, and I'll see you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.